Hello, ladies and gentlemen, and welcome to muzzlightyear. Today we're going to be talking about how playing poker is what makes the all-in podcast guys better investors. First, let's begin with this guy. His name is Peter Lynch. He's one of the most successful investors of all time. He ran a fund at Fidelity at the age of 13, did it for 13 years, and his success allowed him to retire. Now, Peter Lynch, who played poker in high school and in college and in the army, said that learning to play poker or learning to play bridge, anything that teaches you to play the probabilities, will be better than all the books on the stock market. The key to his message is that you should view investing and life in general as games in which we must consciously and consistently seek to maximize our odds of success. So, while the outcomes of our investments are always uncertain, there are things we can do to be smart and things we can do to be dumb about the way we play the game of investing. We can already consider what would be something dumb. For example, putting 100% of your money into one stock or into one crypto, or putting money into something you don't understand, or buying something at all-time highs. So if we know that there are dumb things to avoid, then just avoiding those things will lead to us making smarter decisions. Now, Peter Lynch's analogy of viewing investing as a game of probabilities applies to poker because there are also smart and dumb things we can do there. A dumb thing to do would be to go all in pre-flop without even looking at your whole cards first. But the thing is, even if you did such a thing, you can still end up winning the hand, either by everyone else folding at such an aggressive bet, or by having the best hand when the rest of the cards are dealt. But even if you did win, it doesn't mean that a good decision was made, because your odds of success would have been very low. And that's what Peter Lynch means by playing games of probabilities and understanding your odds for success. Now, think about any game that you've played that involves, real or fake money, Monopoly being one example. There are decisions you can make within the game of Monopoly which can lead to high probabilities of success compared to other decisions. For example, Monopoly professionals, and yes, there is such a thing, they know that the best color properties to buy are the orange and red ones because statistically they have the highest rates of people landing on them. Now, of course, regardless of what happens during a Monopoly game, it usually just ends up like this anyway, with someone rage quitting. So if you don't want to rage quit in investing, then learn to play probability games like poker to better understand what are intelligent decisions and what are not. This will translate to real investing because you'll have built the muscles to analyze and determine what is a high probability trade or investment and what isn't. So it's no surprise that some of the best investors in the world, like Chamath Palihapitiya, David Sacks, David Friedberg, and Jason Calacanis, are regular players together. So much so that they host one of the best business podcasts out there called the All In Podcast. Highly recommend checking it out. And it was all based on their love of playing poker together. That's why it's called the All In Podcast. It was something that they started because when COVID hit in 2020, suddenly they couldn't get together in person to play poker. So they still wanted to have that, bond and camaraderie. So they started a podcast together. And it's kind of blown up since then because it's great. So if you want to become a great investor, a billionaire investor like these guys too, then grab a group of friends or start playing poker online and learn how to make higher probability decisions. Alright guys, that's all we have time for. Press a like if you enjoyed the video, helps more people see it, and subscribe because we got a lot more videos like this coming out. Peace.